Well, I think second quarter is going to look fine for those who've been doing well. It will look okay, maybe a little better for those who've been struggling. But I don't think it's a harbinger for the second half of the year.
Why not?
Well, I think prosperity, certainly with regard to retail, really requires tranquility. Prosperity, by the way, is a little bit tissue thin, even though the unemployment rates are extraordinarily low. Underemployment remains an issue, and the tax cut did not hit most Americans, and if it did, it's been dissipated long ago. And so going into the second half of the year, which is obviously the critical portion of the calendar for retailers, there's not as much free disposable income as one would think. I think American consumers are loading their credit cards up once again. There's tremendous potential for a drop in consumer confidence, largely driven by the events of the day, every day. Yes, many consumers pay little attention to what's going on, but by the time we hit the midterms, I think that's going to start to change.
Well, and I think that's kind of the key point. Maybe we do see a drop in consumer confidence. We haven't really seen it yet. We're still near these multi-year highs. You really don't think we're going to have a strong holiday season? You think folks are going to tighten their belts and pull back and not spend coming into Christmas?
There'll always be a Christmas holiday season. There'll always be a tremendous burst of activity. The question is, what's the tale of the tape going to tell when the year is over? Many retailers are struggling to get themselves in reasonable shape for the second half. If that burst of activity happens at the last minute at very, very challenged margins, which is what we've seen in the last few years, there's going to be some breakage in retail, as there has been.
You really think that all of these, they've been well listed on CNBC and other places, but all of these consumer confidence numbers, business confidence numbers, right track numbers, these are all outliers that are going to come home to roost because of the, I don't know, what did you call it? We need tranquility. Do you think a tweet's going to cause all these people to finally decide, oh my gosh, things are horrible and I really am not confident? Do you really think that it's going to come home to roost, in your view?
If this trade war that's being bandied about back and forth, almost like a schoolyard fight, really does explode into a series of disruptions between the U.S.
So it's not just it's the tranquility. You're talking about an actual policy with trade.
Well, what I'm talking about is the effect of what's going on politically
cycle or something
with regard to prices. I don't think prices are going to be hit this year per se, but they could be hit explosively next year.
Inflation could be a problem.
The prices of goods that consumers buy.
And the specter of that, the publicity that receives, is going to create a tremendous issue in the minds and hearts of consumers. And we've seen in the past bursts of disruption caused by, I mean, I'm an old guy, the oil embargo in 1973, the retail business stopped dead in its tracks. Nobody had any gas.
When the Republicans in the midterms run on the positive effects that they say we've had from the tax cuts on corporate America and on the unemployment rate being 3.9, you don't think any of these positive tailwinds are as a result of that you think that's a false narrative, what they're talking about with
the retail business is driven by the man and woman in the street, not the
They don't have more jobs, and there's more jobs now than people are even available.
They have more jobs, but they're underemployed. So though wage expenses are rising and unemployment would suggest that there's a shortage of available labor, folks' actual income is not rising. And it's under pressure now from inflation, which is beginning to creep. And inflation could become a tremendous disruptive factor if these trade disputes explode, because the consumer is going to pay the price for this.
Go ahead.
Go ahead.
I understand what you're saying. You're assuming that's going to happen. Assume it doesn't happen. And given the state of retail for the last 2 years, where now let's look at the supply side, right? You're talking about demand with the consumer. A lot of the big department stores have really rejiggered and restructured. Where do you see the opportunity there, if there at all?
Well, I don't buy that the department stores have restructured and recovered. I think the winners in retail are the Amazons and the Costcos, who bracket the marketplace, one obviously all in e-commerce, the other one largely brick and mortar. The legacy players like Macy's, although they've put up a whole host of very attractive headlines, really haven't changed their operating strategy whatsoever, not as viewed from 700 or 800 stores. So I look at Herald Square, and some of the things they're doing are very exciting, but they're not translating yet into anything meaningful.
Macy's would argue that their focus has been on online share and cutting back old stores.
Well, they haven't cut back enough old stores, and their online share, which has been rising, is not particularly profitable for them because they're not organized and set up to be efficient, as obviously an Amazon has become. So the shift away from brick and mortar into e-commerce will continue in a big way. I think e-commerce is going to grow again this holiday season by double digits. The legacy players who've managed to get in on that party will do better, but I don't think they've offloaded enough of their brick and mortar space to rationalize the changes that have taken place.